have 16 billion in cash, not because we want 16 billion in cash or because we expect interest rates to go up or because we expect equities to go down. We have 16 billion in cash because we don't see anything that makes us want to part with that cash where we feel we're getting enough for our money.
So the other day I found $5 in my shorts and I was like, this is a lot of cash. Should I invest this or hold on? Then I thought, let's listen to some advice from Buffett about this. All jokes aside, enjoy Buffett's point of view on if you should hold cash or not.
Berkshire has meaningful free cash flow, a short duration bond portfolio, and you're a buyer of low multiple, high quality private businesses and a few stocks. Assuming that the stimulative economic policies to deal with the recession eventually cause interest rates to go up and maybe equity values to come down, Berkshire seems very well positioned to benefit. Would you comment?
In terms of how we're positioned, you know, we have 16 billion in cash, not because we want 16 billion in cash or because we expect interest rates to go up or because we expect equities to go down. We have 16 billion in cash because we don't see anything that makes us want to part with that cash where we feel we're getting enough for our money. But we would spend it Monday morning on the right sort of business, or even if we could find equities that we liked, or if we could find, like last year, we found some junk bonds we liked. We're not finding them this year at all because prices have changed dramatically. So we're not really ever positioning ourselves. We're simply trying to do the smartest thing we can every day when we come to the office. And if there's nothing smart to do, cash is the default option. Charlie?
In terms of future opportunities, the issue is it at all likely that there'll be an opportunity like 1973-4 or 1982 even, when equities generally are just mouth-watering? I think there's a very excellent chance that neither Warren or I will live to see either of those occasions again. If so, Berkshire's not going to have a lot of no-brainer opportunities. We're going to have to grind ahead the way we've been doing it recently, which is not all bad.
It's not impossible, though, we'll get some mouth-watering opportunities. I mean, you just don't know in markets. It's unbelievable what markets do over time. And since you brought up interest rates, you know, in Japan, the 10-year bond is selling to yield 5/8 of 1%. 5/8 of 1%. I don't think there's anybody in our annual meeting of 20 years ago, certainly including Charlie and myself, who would have dreamt that a 10-year bond of a country, you know, running a significant deficit would be selling at 5/8 of 1%. I mean, would you say so, Charlie?
Would I ever? But strange things happen.
Strange things happen.
But if that could happen in Japan, something much less horrible for the investing class could happen in the United States. It's not unthinkable. I mean, we could be in for a considerable period when the average intelligent, diversified investor in common stocks using fancy paid advisors just doesn't do very well.
But you can argue that if what we warned against and hope doesn't happen with derivatives should happen, it might create enormous opportunities for us in some arena. I mean, you know, that we wouldn't be. It might very well turn out to be good for us if you get chaotic markets. You had a somewhat disorganized market in junk bonds last year because there were a lot of them created much faster than the funds available to absorb them were coming in. Now this year you have just the opposite situation. You have money pouring into the junk bond funds, $1 billion a week roughly, and that's changed the whole price situation. The world hasn't changed that much. It's just that the chaos has left the market for those instruments.
You have over $100 billion of cash.
Berkshire does.
Berkshire. No, well, I don't even see how much you got. Maybe you do. Berkshire has over $100 billion in cash, and you say that you always want this company to be a fortress. So how much cash should an ordinary investor have on a percentage basis, do you think?
It depends on their personal situation. If you're working in something where you're living off your paycheck from week to week, you want to have a little cash around, and you certainly don't want to have a credit card that's maxed out or anything like that. But if your house is paid off, if you don't have big living expenses, you got a portfolio of decent, diversified businesses, you don't really need any cash.
So you can be more cash-free than Berkshire is?
Yeah, I've got responsibility. We've got insurance claims. We could have hurricanes that, would happen. All kinds of things where we might have to pay out billions of dollars. And I've got over 1 million people that own shares that are counting on me to run the place so we get through periods like that. But if I were retired, I had say $1 million portfolio of stocks that was paying me $30,000 a year in dividends or something of the sort, and my children were growing, the house was paid off and everything. But, I wouldn't worry too much about having a lot of cash around.